Hello, hello, welcome in everyone. Welcome in. This is your host with the most. And my name is Juanita Adote. Hello, everybody, as you come in. My name is Juanita Adote. I'm the host of the A Round Table Talk. And we're just going to wait to a few minutes before so people can come in. They can see that we're here. And we're going to be talking about is life insurance necessary? And as you come in, let's give a like, and I want you to share it with others as you come in. Let me just go in here to make sure I'm good. All right, we are live. And thank everybody for coming in. As you come in, let me just share this quickly to others. Let them know that we're here. Hello, as you come in. Hi. Thank you for coming in. We're going to have an important topic on tonight about life insurance, and we want to share with others the all about what we're doing tonight and how it benefits you. And we have two women on tonight, Miss Shaniqua Wilson. Good evening, and we also have our sister Juanita on here tonight. So we're going to already introduce who I am. I'm Juanita Adote. I am the host of the Around Table, where we have our perspectives, our views on topics. But tonight is a very important topic about life insurance. It's not taboo. It's not sweeping under the rug. It's not later. Think about it later. It is now that we need to start talking about this. So I'm uh, I'm going to turn it over to our sisters Juanita and then our sister Shaniqua. Just introduce yourself and we'll go from there. Okay?
Yes, thank you, Juanita. God bless. Hi, my name is Juanita Britt, and I'm here to just share some information. As she said already, it's very important. It's to be considered now, not later, and it will only benefit you and everyone that you say you love.
Hi, my name is Shaniqua Wilson. Thank you, Juanita and Miss Juanita. I'm also here to talk about being properly protected, and I am also an agent with the financial services with being properly protected with life insurance. So I would definitely go over some amazing things for you guys to know and understand about being properly protected and covering your assets and your family.
All right, awesome, wonderful. Welcome in everybody on Facebook and on YouTube. Welcome in. If you have any questions, please post those questions at in the subject box so we can go from there as we go along. So anyone can just jump in and say so. Our sister Juanita, you can go ahead and start, and then you can turn it over to our sister Shaniqua. All right.
Okay, great.
All
Thank
right.
you so much, Juanita. I know the topic on the table tonight is life insurance necessary? And I will say with an astounding yes. Unless you are extremely wealthy, then the answer may be no. But then you would have other factors in place, like a trust, which will give instructions and will take care of all your final expenses and your family members as such. And if you have loved ones, you have to consider what will happen to them, not if you die, but when you die. You have to consider the fact of who's the breadwinner in the family. Do you own a home? Even if you rent, if you die and you're the breadwinner of the family, without life insurance, your loved ones can literally lose the place that they call home. It's because they can become homeless, and it's because your income has been lost. Excuse me. So life insurance is more than just a $10,000 policy, which is just enough to bury you. It's a vehicle also to finance your loved ones in your untimely demise, ensuring that they can continue their lifestyle thereafter. Even like when you buy a car, you have to insure your car. And aren't you more important than a vehicle? And car insurance only takes into consideration that you may have an accident. There's nothing to consider whether we will die or not. And I would like to just leave that right there, and Shaniqua can come in and we can go on with our discussion.
Yes, indeed, Miss Juanita. Life insurance, like you said, is really, really important. And she covers some major things because most of the time, people don't get enough coverage. It is a $200,000 gap in the coverage that people get. They get life insurance, and it's only 6 types of policies that people don't even understand, right? It's only really 6 different types of policies. And we'll go over them a little bit more in depth if I got time here. But if you don't get the right coverage to cover all your assets, like Miss Juanita said, you're still going to leave your family in a deficit. Right? That's a major thing that we are having issues with. Most of the time, people go get burial insurance. Burial insurance is burying you. But like she asked you, what about your family and the homes you're living in, and the cars and the assets? How are you leaving a legacy? They are the ones that are going to be left with your debt, because your debt don't go away because you passed away. Now your family have to move out of the home you work so hard to keep. They're gonna have to do certain things that you didn't want your children or your loved ones to do. So having life insurance and the proper retirement account set up is really important for you as well as your family. And that's where leaving a legacy for future generations come in at. Not leaving the debt for them, but leaving a legacy for your children's children, as the scripture says. So with that being said, with the deficit of 200,000 and the bills and people depending on other things, we have to be properly protected, which is a big, big deal. Now, if you guys have any questions about what I'm talking about, or Ms. Juanita want me to go in depth with the different types of insurance, I can do that as well.
Yes, please do, because this is so important, especially to us, because we don't, our people really don't look into it, because it's like this seems like it's taboo. Oh, we already know there's a time to live and there's a time to die, but what you're going to do in between it. So you have brought up something about the different types, because I need to about the I know it's term and stuff like that. Definitely jump into that. But you have brought up a point about the $200,000 life insurance.
The $200 deficit is where it's a gap with what you own and what you got. So say, for instance, and I'm going to give you an example. If I know my house is worth $540,000 and I only got a $150,000 life app, what is that going to do for my family? You get it? That's a deficit gap. That's a gap. You are not covered enough for your properties, that, like Ms. Warner was saying. So you see that gap? So most of the time, people don't think about that. That's where, 95% of people have insurance, but they don't have enough insurance. They don't have enough protection on them. So that's the deficit. Now, the 6 types of policies that I'm talking about, and there's 3 types of whole life. There's a universal index life, there's a universal life, and there's a whole life. And there's 3 types of term. There's a level term, an increasing term, and a decreasing term. That's the only types of policies there are. I don't care how they dress them up. I don't care what they say about them. That's only 6 types of policies. They can say, oh, this is a paid up policy. Oh, you can put your retirement in this policy. Guys, we got to be very careful, okay? Let me tell you and explain to you what a whole life policy does. For one, let me ask you this. Why are you paying for a life policy your whole life? Right? And a lot of times us like to borrow money. Right? And we do it from a whole life policy. Why are you borrowing your own money? See, let me tell you this. That's your money. You just overpaying for a policy. You only overpaying it. That's not extra money. You could be paying $200 for a whole life policy when the policy is actually only $40. The extra $160 is your money. And if you die, they keep the cash value.
That's
If
right.
you
Come
borrow,
on.
you borrow your own money,
And
right?
they taxing
And you
you
paying it
too.
back, you paying it with interest. Why are you
Interest,
doing that,
yes.
guys?
Why?
Literally, only thing you need to get is a term policy, literally
Yep.
a level term for 30 years until your oldest child is 25, and set your retirement account up at the same time you got coverage, because a policy only supposed to cover your assets. Say you got your mortgage is only 30 years. What home are you paying for over 30 years? Tell me. You're not. Your mortgage when you get a home is 30 years. Get a 35-year policy to cover your mortgage and all your expenses. Term policy. Term is the cheapest policy anyway, and it's pure coverage. You qualify for insurance. So get the coverage you need to cover your assets and set up your retirement account at the same time. Not in the
That's
same
right.
vehicle. It's two different things, guys. Universal Index Life, they put the money also in the policy as well, guys. Y'all know that. And they take your money and they don't tell you your policy is going up. And they
That's
take
right.
your cash value and pay for the policy. Why would you do that? When you can set up your retirement account in an account, investment account, Roth IRA, traditional IRA, SEP, or whatever, 401k, however you set it up, and have a term policy for the next 35 years with the proper coverage while your assets build. If you got $1 million in assets, why do you need a $300,000 policy? You don't. It only takes $15,000 to bury you this year. You get it? Now, a decrease in term is that your face value of your policy decrease, but the premium stays the same. That means what you pay in the policy, and most of the time, guys, these are really supposed to be on homes, but sometimes people get them. Pay attention to what's happening. If you got a $200,000 policy, it's going down. It went to $150,000, but the money you paying into it, there's no. It's still the same thing. Y'all know that, right? The policy is decreasing, but the premium you paying is the same. Why do we want to do that? Right? You giving $200 for a face amount of $1 million with a decrease in term, but you still paying the $200. Now it's at $150. Then it's at $100, but you're still paying $200. Who does this? Y'all pay attention to what's going on. Increase in term don't increase in the face amount. It just increase in premium. It's $200,000, but your premium is going up to 150, 200. You know, the premiums are going up. Y'all got it now? So y'all notice the policies. Now the level term is a term policy and it's level. The premium ain't gonna go up or the face amount ain't gonna go up. That's most of the time what we should get. Now let me also tell you about a term and why people are scared of them. They're scared of them because they say, once the term is up, what if I need coverage still? Yeah, what if you need coverage? So go to the right companies. Our company that we work with, that I am a part of, and I call it, it's my company because I'm going to get ownership. We do level term policies, guys. And most of the time when companies do level term and they do offer them, don't get me wrong, they'll say, well, convert it to a whole life. Why do I want to do that? We still, you don't got to go get medical ever again. And we cover you to the end of term to your age 100. Y'all see it? So it's different companies that do different things, but we know we're the only ones that does that. And we cover everything. So why do you still need the policy? You might do need it. You might went and got another home or another property. So we still do it without getting you going to get a medical. So it's amazing what we can do and the things we do. We just want you to have the right coverage and the pure coverage. Because once you qualify, it should be pure coverage. And we don't got no waiting time. Whole life got a 3 to 5 year waiting before your coverage kick in as well, if y'all don't notice it. I don't care if they dress it up with number signs or stars or whatever. You're not going to be covered for the first 2 to 5 years if you look at the policies. Guys, we go over the policy with you. We read the policy with you. We go over it with you. And we call the company with you as well. So take a look at your policy the first 2 to 5 years. Some of them say 2, some of them say 5. If you got asterisks, that means you're not covered. If your family passed away, what they're going to give you? Your premiums back, not your policy amount. So I want you to take a look at what's going on with your policies. Get educated. Get the right coverage. Get full coverage of what you own. So if something do happen, and we call it an untimely death, be properly protected. We call that income. You are investing in protecting your income that's going in the house. If your house burned down, what do you replace? Your house, right? If you lose your car and you get in a wreck, you can replace that car. But if you pass away, what are you replacing? You have to replace the income that goes out of the house. You understand? So that's why we call it income protection, just in case you pass away.
Oh,
All right.
wow.
Y'all got any other questions?
Yes, I have two questions that's posted on here. One is, isn't UIL better for investment? And the second question is, if you have a trust, do you need life insurance?
Okay. It depends on what's in the trust. If your assets is already over $1 million, why do you need the policy? Right? If you got already $1 million of stuff that covers you already, why do you need the policy? That's why we say buy term and invest the difference. And the UIL, let's talk about it again. Universal Index Life. Guys, pay attention, read it. They're not really putting your money where it needs to be. People are telling you that they're putting it in investments, and it's not. Separate it from the policy. Separate it. Okay? Make your retirement account and your investment account different from the life policy. Because if you notice, every year that policy goes up, are you putting more money into the policy, or are you putting more money into your investments? Because they're gonna take your policy and your investment and pay your policy. Are they really putting it in the investment account, the S&P 500? No, they're not, guys. They're putting it in the company's account.
That's right.
So separate it. We separate it from the policy. We separate it. We give you two different things. Okay, policy cover you, and your investments or your retirement account or your cash accumulation account, as we call it, is something different. And why do we call it a cash accumulation account, guys? Because what if you are saving for a home? So we put in an account for you could touch it without you being penalized. But what if you want to save for retirement at the same time? We can set your account up for retirement. So we do a lot of different things. You just got to get with the right companies.
That is so true. That's why I compared it to that car insurance. You will never take car insurance and try and put a saving vehicle attached to it. Term life is the same way. You don't need your savings vehicles attached to car insurance. You don't need your savings vehicle attached to a life insurance policy, because as she said, they take your money and they get wealth. Take your own money, get a term policy, pay that amount, and invest the difference where you're creating wealth for you and your family, for your home,
right.
for retirement, for generational wealth. It's almost like with the whole life, like she said, there's two parts. You have a death benefit. Let's say it's a big one, $500,000. And then you have a cash value over time. Say it builds up to $500,000. You think you got $1 million. No, you don't. Because say you borrow against it $100,000, you're borrowing your own money, as she mentioned, and they're going to charge you interest on it. And if you don't pay it back, they're taking it from the death benefit, which now you're going to get $400,000. They give you one or the other. You don't get both. Get both for your money. Have your death benefit somewhere and your investments taken care of on your own. Why let them keep your $500,000?
That's right. You said it right. They will keep that cash value if you die.
That's right.
They don't give it to your loved ones. I'm glad you said it, Miss Juanita. Indeed, they do.
Okay, I keep going. This is good.
Yeah. So, and this is a big deal, guys. I'm telling you, because we are really missing this. We're really missing it, and the doors and opportunities are open. I am part of amazing company. I am an agent. I'm licensed in over 35 states. So, and I do my stuff VI Zoom. Listen. When the pandemic happened and we lost a lot of lives, just like the trade towers, right? We read policies. You don't take the time to read what you're getting. If you got a policy and you don't understand it, call me, reach out, get in touch with me. I will go over it with you. And another thing we do, guys, we call the company with you as well. We make them tell you the truth. The thing is, we don't want to just move anything around for you without you really understanding what we're doing and why we're doing it. Mm-hmm. You are getting robbed and you don't even understand how or why. Most of the time, if they're agent, and I'm gonna tell you like myself, they got a term policy. Ask them to show you their policy. I show people my policy if I'm gonna help them. But if you got an agent that's selling your whole life, say, show me yours. Show me your policy. Ask them. You get it? Because they're gonna have a term policy because they know it. They know the difference. Okay,
we have a couple of questions on the floor. One, If you don't have assets, do you need a large amount of insurance? Let's deal with that question first.
Yes. And the reason we're saying that, guys, if you got young children, high debt and a house mortgage, you talking about a home or something?
Um,
Assets like a home?
it's a large amount of insurance. If you don't have assets, do you need a large amount? The person that asked that question, are you talking about a home? I hope you can hear that. Okay, let's go jump to the next question. We'll wait for her to respond. Does the insurance prevent your home from going in? Wait. Oh yes. Does your insurance prevent your home from going into probate in the event of death?
No, that's what the estate plan is for.
That's
So
right.
when you get a estate plan, guys, and that's what it's for, everything is written out. Estate plan is a living will, like you're living and everything is wrote out for you. So when you pass away, everything is already written out. And guys, and we offer that too in our business. We can set you up with the lawyer that does your estate planning. So that way everything don't have to go in probate. We miss that too. Because once things go in probate, you got 6 months to a year, right? Before you get it out of court and then people are fighting. Let's have everything set up. Please. No, it don't prevent it. You got to have that estate plan set up.
Definitely.
Okay, so it said said no home. So I guess the home.
Okay, so let's talk about this. We get a large policy to cover our homes and our kids and save for retirement. That's for the kids' education, just in case we pass away. Right? So say for instance, I need $1 million policy. My house is worth $540,000. I got 3 young kids, my 2-year-old and 2 3-year-olds, because I had a set of twins. If I pass away, the house need to be paid off, they college need to be covered, everything need to be covered. But let me tell you what else I got. I got my accounts building up at the same time. You see it? So in the process of me still living, just in case I die in the next 3 years, my husband knows he's gonna get $1 million. Now the house is paid off, the kids' college is funded, and everything else. He don't got to use the money anymore because all the debt is gone. Now what's the extra money for? Because he depends on my income. So if my husband depends on my income and I'm bringing in $5,000 a month, I need that check to still come in $5,000 a month. Y'all get it? So he don't got to go get an extra job or add to it. So cover everything like it's replacing you. The finances replace you because you can't come back.
Okay, so this is a lot. Thank you, Jesus. So someone wrote on. So you need both. Question. So you need both.
Yes, you need a policy and set up for retirement. See what people doing, because they're getting mixed up. They're getting a policy and say, "Oh, this is my retirement." No, it's not. If you get a whole life, guys, that's not your retirement. Do not take your money and put it in a policy, because they're going to keep your money. You're going to lose it. We got so many people that's going to get a loan and say, "Oh, I'm setting it up for retirement." Don't do that. Don't do that, please. Because when you call the company back and you want your $30,000 to $40,000 back that you got a loan for, now you don't got no money because they're not giving it back. Your surrender value is going to be way more, and you don't got nothing now, right? We got people shedding tears. So what we're telling you to do is get a term policy, full coverage, pure coverage. Term is the cheapest pure coverage you can get, and use the rest of the money to invest the difference so your assets build up.
Okay. Next question. As a retiree whose home is paid off and children are on their own and have funds to cover funeral, why need life insurance? Question.
You don't. You already got everything covered.
Just make sure you got 10, 20,000 sitting in the bank where they can take and bury you. You don't need it. That's right. All it's for. And if everything is taken care of, it's covered. Wow. The rich people don't have life insurance because they're set up in a way where they have their estate done, they have their trust done, and they have everything covered. So they don't use insurance. They may use it for different vehicles, like for business and for other benefits, tax benefits, and whatever they can use that for. But life insurance, no. And when you get to a point where you're completely covered, house paid off, kids are grown, all you need is that sum of money sitting there. But don't fool yourself and think you got it. If you don't have it, do something about it.
That's right.
Huh? Okay,
Indeed.
so if someone right now, they're in their 50s, 60s, they do not have life insurance. They have it on their job, but I know as soon as they leave their job and retire, that's done.
This done, and they tell you that they try and roll that over into a whole life, which is going to be 10, 20 times more than what you're paying on the job. It's not going to be cost effective. And yes, you lose that unless you roll it over. But go ahead.
Okay, talk. Okay, let me go back. And you gonna talk about the rollover, and then what they do right now, where they don't have it, they have to get it now. So, what are the steps for them to do? What they have to do?
I'm gonna say real fast. You call me, I'll get you covered. Yeah, I'm saying just call an
Right.
agent. And call an agent, and they will cover you. Right. That's really all you have to do. We want you to get a policy outside your job, because what people don't know
Definitely.
is the only coverage you have in your job is accidental. Right, guys, why are people paying for 6 or 7 accidental death policies and don't really got the right coverage if you don't die in an accident?
Mm.
Why are people
Hmm.
going out there getting cancer policies when they already covered in the policy? If you die away, whether you got cancer or not, right? Like, you paying for these different policies, 5 or 6 different policies, where everything should be covered in one policy, like the terminal illness and stuff like that. We got to be very careful with people bringing you different things in your home to make money. That's all they're doing. An accident policy in case you die in an accident. What if you don't die in an accident? Read stipulations. What if you out there in the car and somebody shoot you? It wasn't your fault you got shot. I got so many times where family members say their son or daughter got shot and they don't pay the policy. Guys, don't be tricked and don't be fooled. Okay, you have to qualify for insurance, and because it's an aleatory contract. What that means is you get a small premium once a month. You paying, and you get a whole lump sum of money if something happened to you. Yeah,
Okay.
right.
Uh-huh. Okay. So the questions are coming. One of the question statements is no. One of the questions, affordability could be a problem. I guess I guess they all depends on what policy is, how much they can afford. The second question, do all the policies have a free to look period in case you change your mind?
Yes,
Eh,
they do. Every
Go ahead.
policy have a free look, but let
Mm-hmm.
me tell you this. Okay, let's talk about the covers first, right? That's why we say, what can you afford? I ask the question, what can you afford every month, even on a rainy day? We work in your affordability. I don't just go give you a policy and you can't afford it. We work in your affordability, and as you increase in income, we increase your policy if you need more coverage, right? That's a big deal, guys, because we don't want you to cancel. We don't want your policy to lapse. We don't want you to run out of money. So we work in your affordability. Okay. Another thing is, yes, every policy do have a free look. So if you see the policy and you don't want it, what's the point of getting it? Why don't we just go over what you want, cover you for what you want, and so you can keep the policy.
The other thing I
Okay.
want to point out also is that you have to be mindful where there's a certain percentage of every person where they say will be disabled. So you
Mhm.
want to get insured while you're insurable.
Yeah.
You think you got time to play with, and then next year, 10 years later, I don't want to speak over anything or anybody, but it's in the percentage where a year, 10 years later, you can be uninsurable of sickness, accident, or anything, and then they won't cover you. Then what are you going to do to need that 20,000? That's burial only. Not talking about to take care of the children and the lifestyle and the home and the mortgage or the rent and to cover your income. You got to take this thing serious. And while you're young, it's cheaper for you. So there's no ifs, ands, or buts about it. It's something that's necessary until you can say, look, I'm wealthy and I don't need it. Information is good, yes. But if you're not there yet, take care of it while you can, while you're insurable, while you're young, because $100,000 policy, say for a child, is a small amount versus a person who's 50. And there's another point I want to bring up too. Parents try to get a policy, say at whatever age for themselves, and then they want to cover their children, but they want to get more insurance on the child than on themselves. No, you need more insurance on yourself than your child because your income has to take care of them. They don't have income that you need. So you must put more insurance on yourself so that the child can be taken care of. The home can be maintained. You have somebody in place that can take care of them to go forward. They say, oh, the child's policy is cheaper. That's not a good enough reason to have more insurance on your child than yourself. The only good thing is about insuring the child is that they're insurable for the rest of their life.
Okay, so we got a few more questions on here. One is, will certain insurance companies turn you down? If so, why? And can you choose a minor as a beneficiary? If yes, what happens if someone dies and the minor is the beneficiary? And is there a period that is required before a policy can be executed if someone dies?
So let me cover the first question first.
Will
Let me see what you
certain
say.
insurance companies turn you down? If so, why?
You're not insurable. Just like Miss Juanita just said, you waiting. So I got people, guys, that I talked to well before today, and now they went to the doctor and they're really, really sick. Oh, I got cancer now. Or 2 or 3 months
Heart
later, this is
issues.
coming up. You're now non-insurable. Why would I give you $300,000 for $50 a month if you're non-insurable? Like I said, it's an aleatory contract. It depends on what's going on with you. If you get a terminal illness or something like that. Because now that you know you need the policy is when you want it, right? That was a big deal. So that's only why you get declined, right? That's the only way. Now, what about the beneficiaries with your children? Yes, we don't recommend you putting a child as the beneficiary because they can't pay bills, right? They can't run anything, but you can put it in a estate plan and say later on down the road they could get it. So have an adult that you trust to be able to take care of your family if something happened to you. Now, if you die and the child is the beneficiary, somebody's going to have to still step in and take over the funds, or they can't touch them until they 18 or 21.
18. That's right.
Right? So do you want that, or do you want somebody to take care of your family while you're dead? So you got to find somebody that you trust and love to take care of them. So that's definitely a big deal.
Okay.
And there was a third
Is
part.
there a period? Oh, go ahead, my sister Wendy, if you have
No,
something.
you said there was a third part to that question.
It was if you choose a minor as a beneficiary. If yes, what happens if someone dies? I think that was already answered. The minor is the beneficiary, question mark. I think that was answered. Is there a time period that is required before a policy can be executed if someone dies?
Well, if it's in the first 2 years, as she mentioned before, and some say 5 years, they're going to look into the cause of death. But if it's past that time frame, then if somebody died, you present the death certificate and the policy is paid, however long it takes to get you the check, a week, 2 weeks.
Sometimes it depends on the company, because if you get qualified with us, I'm telling you right now, that's whole life type stuff right there. Because the first 2 years, you got blank money anyway. But if you get qualified with us and we wrote you the policy and you qualify, they're going to ask for the death certificate and they are going to investigate if you die the next month. But if there was no cause or nothing there from the beginning and you pass away, they're going to give you a policy. They're going to pay it out. Right. And that's what I love about it. So it depends on the company and the type of policy. But I'm going to tell you this, we do have a suicide clause, guys.
That's right.
So you cannot commit suicide within the first 2 years, like Ms. Warner said. So that's a big deal. That literally is a big deal, because a lot of times right now, as the world going, people feel they under stress and they commit suicide. So it's a 2-year suicide clause. Okay, so that's a big deal. All right.
Okay, next question.
Okay.
Oh, go ahead. Sorry.
No, I was just going to say, since we had talked on beneficiary, there's one other thing where you have the contingent beneficiary, where if you have your beneficiary name, God forbid you and the beneficiary die at the same time, you need to have a contingent beneficiary set up who would then take over the policy thereafter. So that's always something to have in place also.
Okay. And question, is there an age limit that you cannot obtain life insurance?
I'm gonna tell you right now, after you turn 80, we will not, because you got 20 years to age 100, right? So how do you want us to get you covered? Now, at the beginning, it was 70, but we got something now that we can go to 80. Now, if you got a policy with us already before you turn 80, we will cover you all the way to age 100, right? If you already got one with us. So if you 80 and you never had a policy, right? I'm going to tell you right now, let's start investing because we don't know when you're going to pass away. Let's put investments there, let your investments grow, and we can have something to bury you with.
Woo! That's a lot.
Yeah.
But thank you. Also, I want to pin, Shaniqua, I want to pin you say you got a website, you got some information, because everybody that's going to come back to this video, because you got people in here, but hundreds of people watch the video afterwards, not
Yes,
just
ma'am.
on here, but also on YouTube. We want to pin your information.
Yes, ma'am. I will.
Okay, question. What if you live past 100 years old? Bless you.
Well, listen, I'm gonna tell you right now. I hope you got your assets built up, right?
That's right.
Because let me tell you, annuities is for people that live too long. Insurance, listen, it's two different things that we deal with. Insurance wants you to live longer than insurance, and annuities want you to die before the annuities get started, right? Y'all know that, right? They want you to pass away because sometimes people get annuities, guys, and annuities is where you get paid per month with your retirement. They sending you your money per month if you get an annuity, right? So if you get total annuity, then there's different vehicles. I can talk about this, guys. I am licensed to talk about this. They want you, if you get pure annuity, say no, and you don't got no loved one, they keep the money if you die the next month. That $200,000, $300,000 you got right there, they're gonna keep it. But we always want to put a beneficiary on whatever we do. You might not get $3,000 per month, probably get $2,000. But if you die the next month, your beneficiary get the money. So don't just do pure. So insurance wants you to live longer than your insurance policy is. Because even if you get a whole life, guys, I'm gonna tell you right now, they're gonna hear all your premiums back because you passed 100. Y'all know that, right? So I want y'all to pay attention to your policies. All right?
Okay, next question. Do you need a medical exam?
It depends on what's going on with you. And the amount,
and
right?
on the amount that you're inquiring. You want 5,
So what if I got
10,000?
somebody that go ahead?
No, I was just gonna say, if you want 5, 10,000, 20,000, they may not ask for all of that. But if you're going for a $500 million policy, they want to make sure that you're all right. So yes, they will do blood, urine, and everything else.
Okay.
And what if you got diabetes or high blood pressure? Sometimes they want to go do the medical too, or they pull your medical records. All information is out there in the Medical Information Bureau anyway, so you cannot lie. I'm gonna tell you right now,
and
they're gonna pull your information, so there's no need of lying, right? That's what we don't want to tell you.
Okay, I have a question, and I have say with me, I have my own. How many policies can you have? Say if I have my own, can my 3 daughters also put one out on me individually?
Yes.
Okay. Yes. So when a time of death, they're gonna pull mine first, and then they'll go for theirs, or what?
It don't matter. It depends on the company they go with. They can pull all of them.
Pull them all.
Okay. Okay.
That'll pull them
so
all.
They will get. So they wouldn't say I have one, and then I have enough to cover my expenses, funeral expenses. What happened to their policy? They'll just get paid out?
They get paid. Yeah.
That's their money.
Oh.
Tell them,
Terry, to go get yours.
I tell them most of the time, put the policy on your parents. Parents put the policy on your kids. Now, guys, if you got young children that's under the age 18, put them on your policy. Why are you buying 5 or 6 different policies?
That's right.
Right? Our company, you can put up to 10 children on your parents' policy, up to 10. That means you can put your grandkids on your policy if you don't got 10 kids. So cover your kids. Like, you don't need that. You don't need to buy 5, 10 whole life policies. But if they're over 18, guys, they have to get their own policy. Now, we used to do it to the age 25, but now we say 18 because kids are not out on their own, right? But I'm telling you, parents, if your kids can't afford it, put a policy on them. Because kids will get
my
wild.
Grandbabies on my policy?
Huh?
I can put my grandbabies on my policy?
They're insurable. You have an insurable interest.
It's your grandbaby. You got an insurable interest. That's right.
You have an
Yeah, no,
insurable interest. And like I said before, once the children are covered, they're insurable for the rest of their life because they have that policy. If they grow up, if you don't cover them, and now they 20 and discover some other underlying issues, they can't get insurance. But once they have a policy in place, it becomes theirs at a certain age. Like she said, it used to be 25, now it's 18 with her company. And now they can take that policy and it becomes their own. But they are insured and they're insurable.
Okay, my next question is this. I have an underlying condition, right? High
Mm-hmm.
blood pressure. Let's put that, high blood
mhm.
pressure. Going to get the life insurance, but turn around, I'm better. I don't have no longer, I'm good. What happens? Do you go back to up it, down, how
Oh
does
yeah,
that
you
work?
can go and say I don't got this anymore. Get a letter from the doctor.
The letter
And if you
from the
want more
doctor.
coverage or you want to change the premium, bring a letter from the doctor. If you want more coverage and change the premium, we could do that too. Okay.
Mm-hmm.
So
Okay.
yes, and the thing is, most of the time when you got a medical condition and you are, let me tell you this, and you're taking your medicine the way you're supposed to, because most time people say, ain't nothing wrong with me, I ain't taking no medicine. They want to make sure you're taking care of yourself anyway. So you might get rated. That's it, right?
Right.
You're gonna get rated because most of the time when people got an underlying condition, they know that they're sick and they're gonna die faster. But if you gonna take care of that, you take care of yourself better. You let us know, get a letter from doctor. This is gone. Send it back to us and let us send it up. This is gone. Let's remove the rating. Let's see what
Mm-hmm.
underwriting say. All right, that's it. That's a big deal as well. Okay, so thank you
It's
for bringing it up.
Yeah, it's almost the same as a smoker. You get rated as a smoker, but 5 years later, or 3 or 2, you quit, and your doctor can support that. Then they will take that rating off your premium to be cheaper.
Yep.
Well, if a person go in default or don't pay uh, their monthly
Premium.
Mhm.
premium,
There's a grace period set.
uh,
There's a 30-day grace period set for that.
It is. It's 30 days. Now, sometimes I'm gonna tell you what we do. We'll put it on quarterly. And now we give you
Okay.
3 months, and you got to pull up all those premiums for the quarter, right? If you still want that policy within that quarter, now after the 3 months, because we could put it on quarterly, say, okay, they'll pay us quarterly. But it's really a 30-day grace period. We'll put it on quarterly, but we want you to pay it monthly. Now, if it lapses, if you get it back in 2 years, you don't have to go through everything else like you did, right?
Right.
Like before. So if it lapses, just say, okay, start right now. Now, as y'all know, insurance is based on age and it's based on health. Like that's why Ms. Juanita to bring up. If you got that job insurance, of course, when you get off the job, it's gonna be higher. Why? Because it's based on age, right? So you're gonna be 60 or 70 when you come off the job. You now gotta have a higher premium and lower insurance if you roll over. That's why. So that's why we say get a policy while you're young.
Mm-hmm.
okay,
Get it?
let's talk about that rollover. That rollover. Can you roll
Mhm.
over? Can you roll over your insurance through your job?
If you do, and you can't roll over with us, if you do, like I said, it's gonna roll over at that current age,
Right. Current age.
right?
And it's going to go from that term, which is a group policy with the job,
Yep.
says term life, is going to go into a whole life only.
Hold
That's the only option they give you.
Yep. And so,
Is
do
that
you
a
want
good
to pay
thing or a bad thing?
$900
Bad
for
thing.
100,000 in coverage?
You said it was a bad thing?
Yeah,
Yeah,
because
yeah.
say you have what is maybe 3 times your salary, twice your salary, figures 200,000. 200,000 once you at the age of retire or you leave in a company, God forbid they fire you or whatever, it's going to be that much more. It's going to be based on your age. So whole life based on a mature age is expensive for a few hundred
Okay.
$1,000s.
So, all right. So, you have the light one at work, right? Need one at home. You die. God forbid, die on not say God forbid, but say you die on the job. The job pay it out first, right? The job will pay the life because you under life insurance with the
Yeah,
job.
you can get both of them. It don't
Yeah,
matter.
you get them both because you're covered on the job
You
and you got
cover
your own
on the job
person.
and off the job. Why not?
Execute
Uh,
the death certificates and pulling everything that you
Mhm.
got out there.
That's
Okay,
right.
so I got a question on the table. Some people are born with certain underlying medical conditions like diabetes. Will they ever be able to obtain life insurance? Ooh, I lost her. Go ahead.
Oh, you
We
did?
lost
Oh,
we lost Shaniqua. Go ahead, Juanita.
they will probably have to rate you. I'm sure they do rate people with diabetes, and some companies may insure them, some may not. So, in that sense, it's like you don't have to have the insurance. Have money set up. Start saving and saving towards it.
Mm-mm.
I'm gonna say this. Talk to me offline,
Mm-hmm.
right? Because we do have kids born with underlying conditions, and because
Right.
we put the kids on the parent policies, but they got other kids with no underlying conditions, right? So say for instance, I got 7 kids, and one of them born with premature death. If they decline one, and I got other ones up there, they're gonna decline all of them because we want to add the kids, right? So we got to be very cautious of what we're putting out on the stuff. Okay, how would you know, like, if your kids? I mean, most of the time, parents. Um, I'll be careful. We'll talk about it later. We got to be, don't speak stuff on our children, and
Right.
like she said, have stuff set up, right?
Okay, next question. You get no, you don't have life insurance on the outside. You get it. You got go back. Somebody has said, I'm not sure which one, because everything is like, I gotta go back and watch this video for real, for real. You get the insurance today. It doesn't, and you got to wait until it doesn't kick in until 2 years from now. Is what
No, if you
No.
get approved
did I
right
understand
now,
that wrong?
yeah, if you get approved right now, you're approved. We do real
You're
time underwriting
approved.
right now.
Mm-hmm. You're approved. Your
Okay.
premium,
So
as
okay, you
long as the
approved right now,
premium's
but you
paid,
die
you're
tomorrow.
approved.
Hmm.
You die tomorrow.
Yeah,
Well, they're
you
Does
approved.
the
got you
money?
got a signed document. Your premium has to be paid though. You can't say, "Oh, I'll pay it when the documents come." Then you're not covered. But
That's
if you
cash on
pay that
delivery.
premium,
Okay, so today got the insurance. The bill is $300. Just saying, $300. Pay the $300. Next week, you die.
you're
Do they
covered.
pay out the money?
Yeah, as
Yes.
long as it wasn't suicide or like she said.
Well, as long as not
Now
So,
with us, you will, but I don't know about whole lot. Whole lot. I said, hold up. Now, give them that $300 back, right? But I know what we do. If there was no
right.
underlying cause in the medical when we
hmm
gave you the policy and
Right.
you
No
die next week, you're gonna
lies.
get that.
You're gonna
Yeah,
get paid.
you're gonna get it. Yeah.
Okay, okay. Now, I want to
I
make
was trying to
sure.
post my link in the thing, so that's why I went off, guys. I'm sorry.
Oh.
Okay, yes, go ahead, and then I will. Everybody will be able to see it.
And you want to put it in the chat, right?
Yes. Are you able to? I got a question. When does the life insurance not pay out? Or when it's suicide, right?
Well, it also depends on if they don't find the condition or what you lied about in the first 2 years, then hey, I'm sorry if you lied. If they don't find it, they will pay it out. But
Mhm.
if they go back, say for instance, somebody make a mistake and put the wrong age up there, and you paying a lower premium or whatever for the age, and after 2 years, the only thing they're gonna do is take the money that you've been paying from your policy and pay
And
for
give
what your
it
age
back.
was and give you the rest. That's it. So if they
Wow.
find it in the first 2 years, uh, like if you lied, right? They're gonna correct the issue. Let's correct it and go ahead and get you covered the right way. So just don't lie, right? But if they find it after that, they're still gonna pay the policy. You already been covered.
Okay, next question. Is it advisable to have more than one life insurance policy?
To me, because I got a husband and I got children, and I got children because my husband ain't my first husband. So of course I got more than like one life insurance policy. What do you own, right? Who are your kids and who are your beneficiaries? What legacy are you leaving? So it depends on your situation and your circumstances. That's what I'm gonna say about that. It depends on who you are and your kids and everything else and what you want to leave.
Next question. Is drugs or criminal activity a deniable factor for life insurance policy?
Yes. Yes, it is. Because they
Wait
ask you
now. Explain that.
specifically.
Explain that, please.
because there is a questionnaire that you ask. Do you smoke? Do you drink? Do you use drugs? Do you take medicine? Do you this? And if you answer yes to any of them, then you're going to go into another thing where they have to look into it further, send a doctor to your house, or look into doctor records and everything else. And if you lie about it and God forbid you die, it's denied. If they find drugs in your system and things like that. So they're not just here to give money out. They're a company. And that's why she said stay away from the whole life, because they're a company. They want to take all your money, invest it, and make themselves rich, when you can take your own money, make yourself rich. But that, yeah, they will look into all of that. They're not trying to insure anybody who's out there on fentanyl and obituates and everything else.
I got a good one for y'all. Go ahead.
It's a certain stuff with the felonies or stuff in the background that they look for, guys. So it depends on the felony that they won't cover you. Okay, and they actually within a certain amount of years, within the last 10 years or something like that. Y'all see, that's a statutory requirement. Okay, so we got to be, where we at with the felonies and what it is. So, and they ain't gonna give you 300,000, right off the bat. But let's get some coverage going on, right? And how long ago it was with it in the 10 years, and what was it? So let's look at it like that. Because sometimes we do stuff as a child that we wouldn't think about crossing over as an adult. Okay, so that's a big deal right there in itself.
Oh, I got a doozy for you. I got a doozy. Mm-hmm. You ready? Mm-hmm. I know y'all had. I know y'all good. You're married. You have a, or before you get married, you have a life policy, a life insurance policy, or when you get married, or both on both sides, and you get a life insurance policy, but then you're not separate, but you're not legal. How am I gonna do this? Who gets it? Who gets the policy if you have say if you got your kids as the beneficiary, you die, who gets that policy when you're married?
Your kids. If you date your beneficiary.
Yep.
So the husband can get the
You got to revise the policy and call a company, do a beneficiary change form to make your husband a beneficiary, the children contingents, or you can split the beneficiary in 50% to him, 25% to each child if it's two. But you have to do a beneficiary change
go on your own app and change your beneficiaries yourself now. So it's up to you. And another thing we did, guys, because we used to have the husband and wife on one policy, like me and my husband got that. You can now pay it from the same account, not as different policies. Right? It's coming from the same account, same house, but the husband got his policy, wife got her policy. It feels like it's joint, but it's two different, because we're getting so many divorces going on, and people calling and we want to separate it. You get it? So right now, like I'm my husband main, and then my kids are the contingent, and he's my main, and the kids are the contingent. So you see the difference? So if y'all separate, they're still the husband kids. Don't you want your husband to take care of your kids? It depends on you, right? So that's up to you. So your kids will get it if that's what you change. And we got the app now that you can go in and change your own beneficiaries if you want to.
Is something the will? Is that could the will change something with the life insurance policy?
No.
No,
because the beneficiaries is on your policy. Now the state plan is totally different. That's why you need to fix it. Yeah. The state plan is something different. Oh, I got a policy just for my state. Yeah.
Oh gosh, this is so good. This is a lot of information, and I'm so happy that y'all both on here sharing this information, because, like I said, this become a not a secret, but it just kind of like we sweep it under the rug, us sweep it, and then what happens? You see a lot of GoFundMe pages popping up because they don't have enough money to cover the cost.
When they should have been covered from a child, when they should have been covered from conception, basically, or when you get your job, or when you graduate college, or when you first learn about it. The time is now to take care of it. It's just like a car. Like I said earlier, you drive a car, they're not letting you take the car off the lot until you insure it. But we walk around like we're not more important than a car. The insurance on the
Right.
car is only if an accident was happened. Our life insurance is because there's no ifs. We will die. We need the
Right.
coverage.
Right.
It ain't no
Leaving
ifs,
generation.
it's a
Oh, this
matter
is
of
good.
when, right? And
Right.
death have no expiration, guys. It have no expiration.
It
You don't know
has.
when you're gonna
Sure
die.
don't.
So everybody need to be covered. Everybody. We used to wait 2 weeks when a baby is born to put them on the
Hmm.
policy. Now it's 24 hours. Y'all get it? So
Amen.
there's no need to wait 2 weeks. Y'all get it? So
Mm.
we can always cover people. So don't have the deficit. Don't miss the opportunity. Let's get covered and start building your assets.
Okay. Oh, we have another question. What can you do to upgrade a current life insurance policy?
It depends on who you got it with. I'm gonna tell you right now. What we do is we'll read your policy for you. We'll go over it with you, and if you want, we'll change it over to us under our umbrella. What policy it is, and if you want more coverage, we'll give you more coverage.
Hmm.
Okay. Let me see if
And
I
we
can
want people to
copy.
get more coverage because, say, for instance, you got that policy when you were young and you didn't own no home
Right. You need more.
and you didn't have all the assets. Now that's where the deficit comes in at. Now I got another home. I got another property. I got this. I got that. We want everything covered. A lot of times, guys, people say my investments is in my properties. Well, how long it take you to sell a property? Your family gonna be buried in 2, 3. I want to be buried in 3 days. You take 30 days to sell a house. Where's the
Right.
money, guys? So don't say my investments in my properties when you need to still be covered.
Yeah. We need to be set up correctly. You need financial advisors. You need um, everybody at your fingertips, lawyers and everything, so that we can be set up. I'm even understanding that trust is so much better than wills because the will can go
It is.
into a contest, could be contested for a long time. So now your money is tied up 6 months, a year, or longer, and your family members are losing their. There's no telling what can happen in that amount of time. It could be detrimental. So we have to be
Ms.
set up
Juanita,
correctly. Yes.
you're right.
Oh, which
And
one?
everything you just named, I offer. We offer that. Everything
That's
from the trust, the
awesome.
will, the
Right.
lawyer, I got the finances license, everything. It's right here at your fingertips. That's who I am. So
I
I'm
love
telling you
it.
guys, I'm tied with FINRA, Financial Industry Regulatory Authority. I got my professional license. I'm not just talking from the seat of my pants. I'm licensed in these
Hmm.
areas. So that's why I can answer the questions with you guys. Uh, we want everything. Miss Juanita is so on point. I'm here in Texas, y'all there in New York, and this is really key for everybody that's up here because a estate plan is better than a will because a will you can write out by hand and somebody can write it, they can change it, they can hide it. But a state plan, and I got a policy, guys, for a state plan, right? This is
Hmm.
my state. They got it right there on the policy. What is this for? A state business, anything. They got it right there. Other entities, they got it right there for you to choose. So it's a big deal, okay? And I don't know if y'all own businesses. Do any of y'all own businesses? Y'all
Yes.
know it's called something called key leadership policies if you own a business. Because you can have a policy with your family and you can have a policy with your business. Because if you own a business and you're trying to leave a legacy for your family, let me tell you this. Those leaders, 3, 4 leaders, need to have a policy with 3 people with the business owners own the policy as the beneficiary. So if one of them die,
That's right.
the other person get the money to hire
And the
somebody in their
business can
place
go
because they
on.
key leaders. That's for
Hmm.
ministry as well. They pastors, head pastors. If the pastor passed away, get the church paid off, and you hire another pastor in that capacity, so they don't have to go down. Y'all get it?
That's right.
Yeah.
That's right.
Right now I'm posting your information from off of the StreamYard. I'm gonna try to put it in here. So everybody that will have any questions, because I'm ready. I got questions. That's why I need this information because so many of us decided like I'm not worried about that. I'm still young. So I'm putting all this stuff right here. Make sure I have it right. Let me enter it. It
And
should
what
pop
that's
up on you.
saying,
Let me
What's
know if
that?
everybody could. Oh, there it is. I just put her information, Miss Shaniqua, information in here on on the post. So if you just can, when you finish, you can click on this and have her information, and you can. I'm gonna heart it, and you can have this her information to reach out to her to get everything that you need, because this information is so important. So important.
And that's my
Okay.
phone number, guys. One thing about me, I want everybody to know I am a retired veteran after 20 plus years in the military. So I tried a lot of different things when I came out of the military. I study my craft. That's what I do. If I'm gonna go in something, I'm gonna give it my full heart. When I joined this company, and it's a lot, it ain't that other companies didn't offer me or want me a part of their company, right? But the ethics behind things, right? I'm a believer. I love God. I trust God. And when I pray, this is where God brought me. And when I studied my craft, they gave me an opportunity to be who I am and to lead and open up doors. I made regional vice president in 1 year by studying my craft. So I'm going for ownership. This company give you ownership. What companies give you ownership? But unless you build it from the ground up. So that's what we do, guys, right? And we want people to have the right information so they don't have to ask for a GoFundMe page like you guys said. Only thing we're asking for you to do is spread the wealth. Spread the wealth. Let people know. Like, let's understand. I'm not gonna say, oh, let me change over your policy. I'm gonna say, let's read it and go over it. Let's get knowledgeable about what you have. Because sometimes you already got a policy and now something happened. I ain't saying cancel your policy and jump with us, because if you got an underlying
Right.
condition, who said you're going to qualify? Don't
That's
ever
right.
cancel your policy until you pick up a policy with another company. Keep your policy first if you already have it. Because if say man, you had that policy for 10 years and now you're sick and you uninsurable, it ain't that we could just switch your policy over because you might be uninsurable with us. Keep the policy that you have. So let us see what you got first. Let's have a conversation to see if you're insurable, but you already covered somewhere.
Okay, I got another question. What if a life insurance company collapse?
What are you saying?
Go
We had
belly
a lot
up?
of them to collapse. We had a lot of them because they knew, and we took them out of business, guys. We took them out. We did, but we really did. We really, really did. If y'all pull up stuff, and every company got hate stuff on them, right? And we got a lot of hate stuff on us, not because we're doing anything wrong. It's because people don't believe in buying term and setting up a cash accumulation account or an investment separate. That's the only
So
way.
true.
But
So
if you,
true.
and that's the only reason it's hate stuff out there. But companies do collapse because they do wrong things. Their ethics are off. If your policy is there and they collapse, you need to go see why. They probably send you a letter, or they might not send you a letter. I had a person that I reached out to, guys, and they said we had to pay the policy. We tried to call the company, whatever just paid the policies. I never heard of it. They said, we don't know what you're talking about. And she really thought she was covered. Now, 10 years down the road, she have nothing. I'm listening. Serious. Just came.
Wow.
You're right, because they don't know. What's a paid up policy, guys? What is this? I'm serious. What is it?
What's the
Y'all
question
know?
again?
What's a paid up policy?
A paid up policy?
Mm-hmm.
I don't know.
Ain't no such thing. That's what I'm trying to say, right? So what I'm saying is, some people, oh, I got a paid up policy. What is it? Somebody paid for it for that year. Now you got to pay for it the next year, right? Because you can pay for it annually too. That's
Oh,
a
that
paid
was
up
my
policy.
question.
The
I was
next
going to say,
thing,
okay.
right? So you can pay for it annually or quarterly or monthly, right? And it's a big deal. So if you can pay for it annually, pay for it the next annually, pick it up monthly, guys. It's different ways you can pay.
Okay. That was my question. Now, can you pay annually? Good. That
Mhm.
so you will sit down and say to the person, every individual, if like I'll say I'll come in like gun ho, you know what? Give me $1 million policy, and you're gonna sit down with me and say, sis, let's go over first. Let's go over some things.
We're gonna
You'll
go
go
over your
step by step.
finances first,
That's
and I'm
right.
gonna see what you could afford. I'm not just gonna
Okay.
cover you for me. I'm not that agent. Now, some other agent might will because they want the money, but no, I'm not gonna give you no $1 million policy if you can't afford it. What
Okay.
can you afford per month, even on a rainy day, that I know I can get you covered. So if you give me $300, you know what I'm gonna do with that $300? I'm gonna say I can cover you this amount, and this amount I'm put in a cash accumulation account for your investments. I'm gonna
Oh,
set you
let's
up for
talk
two
about
different
that.
vehicles. And then at the bottom, guys, we a whole package. That's your estate plan, that's your ID step, and that's your waiver of premium. Right? I set you up even for a waiver of premium in your policy. That's in case you get hurt on your job and you cannot go back to work. Right?
Mhm.
We
Some
are
good
that
stuff.
type of company, right? So we got everything. We're a full service company.
Okay, question. Can a grandparent take out a life insurance policy on their grandchildren, or must they include their parents' name on it?
No, they can take it out their
No,
grandkids.
they're insurable interests. You can't take insurance out on a friend or anything like that, but insurable interest is a parent, child, grandparent, grandchild, husband, wife.
Oh, so you can't take one on. Okay, for me, like I know, like when one of my family members, my brother, been transparent. He is reckless, right? And I know it's gonna be on our shoulders. God forbid he leave before we do. I can't insure him. I can't put a policy out on him.
No, he can put it out on himself and you can tell him to pay for it.
That's right.
Oh yeah, because he's okay.
You get it?
Okay.
Or you
Yeah.
make him have him go through all of the paperwork, you pay for it, but he has to be the
Yeah.
owner of it.
He got to be the owner.
Can
And
you
you can be the
can you
and you can be
cash
the
out?
beneficiary. And you can be the beneficiary.
Okay. Can you borrow from it?
No,
Well, no,
not on
that's
the
why we
term
setting up
life.
your investments. That's why we setting up your other cash accumulation account.
Hmm.
Can you talk about that? That what you're saying, that cash that part.
Okay,
You
so a whole life policy is one that you pay it over and above the amount, right? And they say borrow your own money. Why? I'm gonna ask again, why are you borrowing your own money?
Right.
You just overpaying, right?
Yeah.
So what we do is we give you pure coverage. The same, say for instance, you paying $94 at a whole life of 100,000, $94 for $100,000 face value. I give you the same policy for $29 and take the $65 and put it in a cash accumulation account. That means set up your individual account. If you want money, take your money out of your account. Why you got, and it won't affect your insurance at all. That's two separate things. That's two
Yeah.
separate things.
okay? Okay. All right. Got you. Wow. This is so good. I will be calling you. I will. And I appreciate this is just I appreciate both of you,
Mhm.
Sister Juanita, Sister Shaniqua. I appreciate y'all coming on
It
here.
sounds like to me, Miss Juanita was an agent before.
Oh, yes,
She's really
definitely.
not. Mhm.
With the same company.
Well,
Yes.
why don't you come on back? Come on back to us, right?
I know,
You can
because
come with
it's
me. I'm looking. I wanted to promote people, right?
right. It's
Uh,
so important, this information. That's why I agreed to share with her and to
Yes.
share the information, because people need to know and they need to be covered. They need to be informed of the information. Yes. But I had pursued other things, but definitely it was really recent. Hmm.
Okay, a few before we close out, and I thank you. Oh, I thank you. Before we close out, because I don't want to hold everybody up. And if you have any questions, we already got Miss Sister Shaniqua information. We got her website, her information posted, and her phone number posted in this chat. The question is, what if it's too late to qualify for insurance? What would you suggest?
Set up an investment.
Set up an investment. Okay.
Mhm. The reason I say that is because you won't. What do we need insurance for anyway? Burial, right? We also want it for estate planning, just in case of an untimely death. So if you can't qualify, set up an investment for the burial. Now, if you're an older person, now let's talk about your kids, your grandkids. Let's get them set up with life insurance and investments now at an early age.
Okay. My auntie, hi auntie, Rose. She said she will be calling you tomorrow because she lives in Houston, Texas.
Amen.
Yes, yes.
Like,
So
guys, before Miss Juanita take it, I truly believe that God got us in this industry to help us. Right? This is a big deal, and the wealth of the wicked is laid up for the just. And God cannot do the wealth transfer if you're not ready for it. And the reason I say that is because when I joined this business and I made regional vice president in 1 year with all licenses, and I got my even principal license, my own base shop. God is really not
Yes,
opening up doors, right? Open up doors, and we need, because the first place people run to for insurance is the ministry. Am I correct? To bury them, they want to go borrow. So on the policy, it got other entities. If you want to leave some money, put your ministry there,
that's
5%
right.
or 10%. So that
That's
money
right.
could go back in there. They could be a beneficiary on the policy.
That's right.
My assignment is to go
Yes.
into the ministries. I'm going to the head people of ministries, the bishops and the pastors and apostles right now. And I'm talking to them. First of all, get a key leadership policy and let me talk to your members so they can even put your ministry as a beneficiary, at least a 5 or 10%. So the money could come back in the ministry or the benevolent fund how it's set up. Everything don't got to be separated by 50 or 100%. You could put 5% and 95% go somewhere else and separate, like Miss Juanita was saying. So it's a big deal. So let's help our ministries out. So when people do go to the ministry, we are also set up to take care of God's house as well.
Amen.
this was divinely orchestrated. Oh, I love it. Thank you, God. Okay, before we close out, is there any other questions before we close out? Because this was a lot of information, and everybody who is watching or who will be watching this afterwards, please reach out to Shaniqua Wilson on the page, the thing I posted, and her phone number to get all the information you need. Do not sit around and like you have years. We don't know the day, the time, or the hour. Today, there was somebody had quoted, which is true. Yesterday is gone. Tomorrow is not promised. You got today. So we're just saying, yes, it doesn't matter the age you are, you can die. You can see people dying, kids are dying, young. And you got people that's middle age and all of that. They're leaving this earth, and then you don't have nothing in place, and then you got to try to go to family, and some family members don't even have it to give. It's not that they don't want to, they just don't have it to give. Please, this was so important that for me, and I'm looking, especially our community, that they do not have anything in place. My mom, my brother had something in place for my mom, but guess what? It wasn't there enough to do what we had to do, so we had to do other things. But a lot of it was there because we had a funeral up here. We flew her down to North Carolina. We had another funeral there, and still in all, my brother had to go back in and talk to the director after everything was over. He makes sure that he took care of everything. That's just me being transparent. And there's a lot of people, a lot of family members that is not covered. So this is so important to us as a people, as a community. Get the insurance, get the life insurance. Everything that was spoken tonight has awakened me to like want to even share. So if everybody on here can repost this video so others can see it on your timeline, so they can go in and talk about it, please reach out to Sister Shaniqua, Sister Juanita, Sister Shaniqua, right? and ask her questions. Sit down, have, because a lot of us is on here is from New York and other places, because there are gonna be other people that's gonna be calling you, and we appreciate you for just dropping in within 10 minutes. Well, no, 5 minutes before we went live. Before
Yes.
we went live, so I appreciate all of that. And I'll see any more questions. So we're gonna thank everybody that came on here. That's here, that's watching this, that's taking this serious. That is like, no, we don't got time to play. Make sure you're good. 4 generations of blessings. When she said, I was like, you talking to me? 4 generations of blessings. And we have to be on top of everything. Because guess what? There's a time for birth and there's a time for death. Please stop walking around here like you're not going to leave this earth. You will. Have things in place when you do. Okay, beautiful people? Thank you, Sister Shaniqua. Thank you, Sister Juanita. I appreciate
you.
everything that you poured out on tonight, all the information. So we would thank everybody on YouTube and also on Facebook. Please come back again because this was some good stuff. And we're gonna say goodnight, but I always close out everything I do. It's not over until God says so. Take all this knowledge, take all this information, and run with it. Tell somebody else. Okay? Anything else before we close out, sisters?
No, ma'am. I am licensed in over 35 states, so I am licensed in New York. So that's why I'm here. My family's in New York, my family's in North Carolina, my family's everywhere, and that's all I have. I just know God is on the move, and let's stay with the times.
Amen.
Sister Juanita.
No, ma'am. It's a
That's
blessing to be covered in all of those states.
Yes, right?
Yes.
All right. Thank you. Thank everyone. And we're
Thank
bid
you.
good night. It's not over until God says so. Have a good night, everyone.
Good night.
Bye-bye.
Good night. Good night, Miss Shaniqua. It was a pleasure.
Good night. Bye-bye.